Hello everyone and welcome back to the Crypto Moses channel. Today's video is extremely insightful. I want you to stay till the end just so you can learn some tricks I've got while I'm using Margex. I still day trade on Margex every day. It's probably one of my favorite exchanges. It's so freaking easy. The leverage is simple and it's simple to understand how much I'm risking every play, which is so critical and important when you're taking a risk by leveraging. So just be very smart about it and understand how to use it. But let's get right into the video today. So Margex is a very simple system. They've made it almost idiot proof because I consider myself an idiot. So let me show you guys what I mean by that. On the left side here, it gives you all the assets that you can trade and utilize with. And in this list of assets, you can use any of these to basically be your, how do I call it, risk tolerance. So like if I had 1,000 Bitcoin in here and I was trading, I could use if I was trading Ripple and I had 1,000 Bitcoin in here, I could use BTC as my collateral. There's the right word. It is my collateral to allow me to have a bigger position open in Ripple and be able to hold it longer. So if I take a big dip on it, I'll be able to protect myself thanks to the collateral from the other assets. Not many other exchanges let you do that. And I really like that, because then now it means every trade I take, as long as it's very calculated, I have a way higher probability of succeeding through it due to the fact that I have so much more collateral available, especially because I do get paid in some random tokens sometimes. Sometimes my freaking friends will send me random tokens. So I like being able to use that as collateral in my main account. And in my test account here, I like to just show you guys what it looks like. But I hope that makes sense, right? Collateral from any token is very smart on their end, where many other exchanges do not do that. But within the system itself, there are two kinds of margin. There's going to be cross margin and isolated margin. And I want to go over this every time I make a video on it, because you need to understand it. This is the fundamentals of leverage trading. So cross margin allows you to have the collateral of all of your money. So for my example earlier, let's say I had let's just say I had one BTC, okay? And with this one BTC, I was going to play a $50,000 position on Ripple because I knew Ripple's going up. So I take that risk on it, but Ripple takes a little bit of a dive because we've got, as we would call, a stop loss hunt in the trading world. So a stop loss hunt is occurring. My stop loss was luckily way under that due to the fact that I would be under cross margin. That other one BTC I have would be able to be part of my collateral, so that if Ripple really dips down in that stop loss hunt, I won't get stomped out and lose my entire position. Where isolated is a little bit different. Isolated means that the only loss I would have in this example would just be the Ripple money. So this is nice though, because if I have a very concise play that I'm taking that I know will work, I don't need extra collateral for, an isolated trade is the one that I'll usually take, because then my risk is only what I risk for in that position. Let me walk you guys through how that works. So when you're making a trade in this example for BTC, it also allows, so we're going to keep it on isolated leverage because that's the easier one, especially if you're new. You want to always trade on isolated leverage just so you understand how the system works and see how far you come with it. And once you start seeing some good profit numbers, then you'll be able to play some margin numbers, because then you know your trading strategy is working, especially if it's still consistently working for you. So just kind of that in mind. Now in the isolated, with the amount of leverage you want to play with Bitcoin, it allows us to do up to 100x. So this is the example. Let's say I want to open a $10,000 position size, right? The position size is 10,000 bucks in this example. So if Bitcoin moves 1% in this example and the position size was 10,000, then we would make $100. If it moved 10%, which Bitcoin does that on the daily sometimes, not recently, but it can do that, then we would be up $1,000 in this example. And it works vice versa. If we lose 10%, Bitcoin goes down 10%, we would go from the $10,000 position down to $9,000. So just kind of keep that in mind. But it allows us to pick how much leverage we want to do based on that. So let's have the 10,000 in here. That's our position size that we want, and we want to 100x it. So the way to do that would be, and it will tell us, so for us to 100x a $10,000 position, we only need 0.0018 BTC, which right now is $104. So think of it that way, you guys. $104, 100x's allows us to open a $10,000 BTC position. And if it moves in that right direction with this 1%, let's just say Bitcoin moves up 1% and we had longed it, then we would be up $100. We had just doubled our money with this $100 risk thanks to using Margex and using it on isolated leverage. Keep that in mind when you're trading. Isolated and cross margin leverage is the most important fundamental aspect of this. And thank God Margex makes it so freaking easy to use their system. I mean, it's extremely freaking simple. You put in here your position size. Let's just say I was going to only do 1,000. Right? There is no BTC fund, so ignore that line here in this example account. But let's say I was to do 1,000 and I was going to 100 exit. It would tell me all I need is 0.00002 BTC, which is basically $10, right? I would need that 100x leverage, allows me to open $1,000 size position. If Bitcoin moves up 1%, I have now doubled my money because I had made another $10 because 1% of the 1,000 is $10. So keep that in mind. Margex is one of the best trading systems that allows you to play with leverage with a very, very small amount. And their fees are not that bad. There are two types of fees I want to put in this video. Very, very important for you to understand. There is the limit fees and the market maker fees. Now, if you use it in a market trade, that just enters the market with exactly the price it is right now. If you do a limit trade, it allows you to pick a number to enter or exit the trade, and it has to wait to hit that number. And they charge almost half on limit trades compared to market trades. So just keep that in mind. And that's a standard thing that many exchanges do. And many exchanges do play like that, which is normal. That's the standard within the industry. So keep that in mind. I definitely recommend use my link below for Margex. I freaking love this system. I've been trading on it for the past 7 to 8 months now, I think. And every month I've been consistently profitable. I've actually had 1 month where we were at a bit of a loss, but that's just because of my fault. I closed out a position too early, and that's okay. You learn from it. You do it again, and you just keep going until the positions work to your advantage and you fully understand the math and what you're playing with. Take your time. Let me know if you guys have questions. I'm always here to help. Let me know what you guys think of Margex. Leave a comment below. Give me some ideas. If you've made some good profits, send them to the channel. I'd love to see them. Thank you guys so much for watching. I'll see you on the next video.